Hi everyone, welcome to this video, and here I'm going to walk you through my latest daily market analysis. Okay, this will be the trades that I took off the back of it, so really it isn't hindsight, it's exactly how I break the market down in real time and what I look for, what I ignore, and how to structure some decisions and how I look at the markets and make my decisions. I'll go through the analysis the same way I do every morning, and then I'll show you, the trade execution. So let's start here. You can see clearly we're looking at the Dow. I like to look on a 4-hour chart, really just hones in a little bit on the structures and the analysis that we're doing. The daily chart will be a little bit too slow for us because obviously we're looking for closing candles most of the time, and obviously when most people are trading, the brokers and the candles there, they're looking at 10 o'clock at night. So we want to give you something actionable during the day, during the here and now. And here's a nice little setup that we have in the Dow. You can see exactly what I'm looking at. I'm looking for those historic repetitive patterns. So what does that mean? Well, if it's done it before, it's highly likely to do it again. Every time we pull back to the uptrend, or this like yellow line here, which is a 200-day moving average, we get a rebound, a rebound, a rebound. Less of a chance here. So maybe the trade we're looking at the long here is a little bit more risky as you're seeing this kind of high and a lower high being established. But really, the equity markets have been in a bullish phase for some time now. So if it's done it in the past, it's likely, hopefully, to do it again. So we're trading this kind of historic repetitive pattern in line with the underlying trend. And as I hone in the chart here, you can see the trend has been going, this is way back November last year. We've gone above the 200-day. Everything, pullbacks from the lows, has created a profitable buying opportunity. So that's what we're seeing here at the moment. So keep an eye on that one. How would I structure that chart? Well, how would I look at my trade and things like that? Well, we don't want to give money away for nothing. We want to make sure we're in with a nice risk. So I'd look for where's the low to place my stop. So it's just outside this kind of trend line as well. So if the trend does break, obviously it's looking more problematic. I'd like to see maybe if we could nick a 2-to-1 out of it. If we're in the trade, I would then move my stop to entry fairly quickly, given the opportunity. Obviously as well, we could put a trend line here. 3 valid touches for a trend and to be established, and we can see we're hitting that trend line as well. So price action gets above there. Let's see. But we know equity markets have been strong. They're just pulled back from their highs. What's to say they can't go back higher as well? We're trading on what we can see. We're doing it for the right reason. We have a structure in place. It's part of the strategy we want to look at. Okay, so we like the long in the Dow, long at here, 48,933. Probably how long do the trades last? Well, you're probably thinking 24, 48, 72 hours, something like that, in order to get to the target price. Again, we need to be proactive with our stock management, our trade management, but everybody on our programs gets told and shown how to do that properly. We don't want to over-risk our capital. We want to be conservative. We want to be good, solid traders with hopefully high probability setups. I'm going to show you euro dollar now because I think that's looking like a short, and we're trading in line with the trend there. You can see I've pulled the trend from here to here. You've got your valid touches. We've had some good buying opportunities on the pullback to the 200-day moving average and up, but we've got a lower high, and now we're below this 200-day moving average again. And we think this could be a nice level to sell. So 117.69 and 70 level, a good opportunity to sell. We've structured a minimum 1-to-1, so it's easily done on the systems that we have. You can see a risk reward 1-to-1. I'm risking 1% of my underlying capital, not my leverage capital. That's very important. And you can see price action is moving lower. And these are something we can teach you, we can train you to action each day. I don't want to show you hundreds and hundreds of trades to do every day because that just dilutes the analysis and what we're offering, because we're looking for secure or more secure trade, higher probability setups because of the momentum, because of the chart structure, and because of what we see. And I would just typically move that kind of price action. So here's roughly where we want to sell it. Quite simply, try and keep your charts neat and tidy, because you're going to go back to them and back test and look at them, because what's happened with your trade, and then we can monitor that from there. You can see every recent trade we've had in this pair has worked out quite nicely. Even previously, remember, we're looking for those historic repetitive patterns. Previously, it broke down below the 200-day moving average, momentum flipped, and we got a downward move. Here, momentum's flipped from a bullish to a bearish setup in line with the downtrend. Lower it goes. We're seeing this. This is a MACD, moving average convergence divergence. This is relative vigor. So we're looking for that to turn negative. Also, you know, we have some news out, but that's going to be while we're asleep in the UK. 2 o'clock our time is President Trump's State of the Union speech. Can prove to be very volatile, and I'm sure once he gets up on the microphone and on the lectern, he'll be jumping around and making markets maybe move a little bit, and maybe the dollar will be somewhat pretty lively. So you need to be aware of that. Don't just leave things open for the sake of it. With this trade here, though, we can weather the storm because we're outside a trend. If it goes wrong, I know I'm only risking 1%. I'm a happy, conservative, profitable trader. If it goes right, we get hit overnight at our level, that's fine. If we're somewhere in between, when we wake up in the morning, we have a decision to make, I would typically just let the trades run out to fruition, because it's our structure, it's part of our trading plan, it's how we can strategically do this properly. So, you know, what we're trying to show you here is look for some stability in your analysis, look for some commonality in your analysis, and trade hopefully with the underlying trend. So here, EURUSD, what a beautiful setups these were, all the way back, selling in the downtrend once it's broken its 200-day moving average. Now we are going long. Why is that, you're asking me? Because you're in a downtrend. Correct, we are in a downtrend, but also we need to understand support and resistance. We've had, the first time, we haven't had a lower low established, okay? And your actually price action is pushing higher through this trend. We have been watching it, but everything's now more in our favor because we've got positive momentum. You're trading what you're seeing. The market is telling it. These aren't special indicators or things like that. It's part of a kind of recipe to get everything. If you mix it all together and it all looks good at the same time, you've got an opportunity to enter hopefully a higher probability trade. So everything that we're doing is consistent, and you need to have that as a trader. You need to do that with your plan. The strategy I've shown you is the fast track momentum. It's only due from us because I built it over many, many years of being an investment bank trader. So we know the things that you need to look for, and hopefully the things that work. So if you can adhere to following some rules, being disciplined in your approach, then you've got a lot of opportunity to hopefully build some wealth and increase your trading account. So now, whether this trade won or lost really isn't the point. It's still open, but it is an important part of the process. Every day I come in with structure. I know what I'm looking for, and if it doesn't align, guess what? I don't trade. And that really is what builds that consistency. If you want to see more real breakdowns like this, make sure you subscribe. And if you're serious about building a structured approach, instead of just reacting to the market and like having this hope analysis, I hope it goes up, hope it goes down, check out Trade Uni below, or even just reach out to us. I'll see you at the next one.